Hello big boys, how are you doing? I think there is a crescent retail sentiment inside of you trying to short USD. But don't do this, I have great information for you right now. But before we start, don't forget to subscribe and hit the like button. Let's go! So boys, last week we talked about EURUSD. We saw the first warning that maybe the bullish trending was about to end, and I think I was right about this. And if you remember the candle from last week that I made a prediction that I think was happened is exactly what happened, and I was talking about maybe a top of 147,000 long contracts, but what we saw this week, it's well above this, and we had some sell signals for EURUSD. And if we look to the data, we're going to see that EURUSD is stretched from net position, buying power, open interest, COT index, and so I think we are about to see a big pullback in the next days, and just next days, but in the next weeks. And one interesting thing to note is that right now we have a top on open interest. It's more positions than usual, and according to Libris, the author of this book, it's a right book. Unfortunately, he's paying not me to do this advertisement. But according to his book, that is a pretty good book, he says that the trend change often coincide with peaks in open interest. The importance of the trend change is often proportionate to the size of the peak. And right now we are 10% above of the average open interest peak in EURUSD. So I think we are going to see a big drop to the next weeks. And that's it. So let's take a look on the data. You can see here that right now we were expecting, this is from last week, we were expecting like 147, but what we got is 162,000, and this is well above the previous level that we talked on the past week. If you remember this, we are talking about maybe this level, then we are above it. And as you can see, our open interest peaked right here, 3,000, and right now we have 3,021, so we are well above it. And this weekend I made some interesting I added a tool that is seasonality on top of COT data. So let's see, for example, for EURUSD, what this tool is telling us is, for example, can you see this head box here? What this tool is telling us is the year of 2020 had a pretty similar movement to the year of 2009. And this black line is what happened in the year of 2009. So if we believe in seasonality, what we're expecting right now is a big drop, at least a big pullback. And if we think about what we're seeing data and the extreme in the next net positions, this is make a lot of sense. And looking to the chart, if you remember what we did last week, this purple was the thing that we were expecting, and it was pretty similar to what we saw. And right now I think we have all the ingredients needed to take the price exactly right here, and this is going to be a big push. We are talking about almost 300 pips, and with this push we will see these positions get a little bit where it is, they take profit on these positions a little bit, because as I discussed and I stressed this a lot of time, even big banks and funds, these guys have limited amount of money, and as the players do not change a lot along the years, what's happening is that money change pockets, but the amount of money available in the markets to trade remain regularly the same. Okay, I think there is another interesting fact to take a look at EURUSD. If we look on what half-life projection is telling us, is it's also in line with this. So we can have EURUSD keeping the bullish trend, the bullish appeal until the middle of September. Then we will turn completely bearish. But these do not discard the pullback I am waiting. And also, if we take a look on the seasonality, just for if we look for prices, let's see, for example, we are talking about 2009. It was the year with the most similar to in terms of COT data. And if we look here, we have this big drop ahead of us. Can you see here on this valley? So yes, I think we are about to see the plan that we draw the past week. Okay, so right now the idea is to keep the bearish sentiment. Don't be bullish. Don't be bearish USD. Not the time to be bullish. And if you are a scalper, now it's a good time to sharpen your tools and trade to the short side only. Okay, friends. So let's move to the other one. Let's take a look on AUDUSD now. You remember last week what I said, that maybe a huge bull trap was mounting on AUDUSD, and I think I hit the fly exactly, because check this. We saw, check this, big amount in short positions, big, and bulls didn't take profit, and they even added 100 contracts. But check this. Can you see this? This is a bull trap. They tried to break to the upside, but they could not. So right now, what I think is going to happen is exactly this draw right here. And why I'm thinking this, and why I think this is going to be fast. First thing, friends, take a look at this. Can you see? We came from 3,000 to minus 5,000, almost minus 6,000 contracts. So it's more than the double to the other side. And we also had the longs keeping the same positions while the shorts are adding and the open interest is rising. So what is the expected right now? We all are going to agree that these longs, they have these positions from some time, so they are in profits. So what do you think these guys are going to do when they start to see their profits evaporating? They are going to do like retail traders do and pray to the market to go up? No, my friends, they will cut their longs, and with this we are going to see price going down. And these kinds of movement right here, this pullback, this is small pullbacks, this is when shorts takes a little profit and then they add again. Okay, so this is exactly what I am expecting, and COT data is completely support us on this, and that's it. We saw a huge change of bias from big specs. They almost trapped us, but we know how to read the data, so we didn't get trapped. Okay, friends. So right now, remember I taught you that's not a good idea to long USD. AUDUSD from last week is still not a good idea. It's a good idea to short it. So keep it to the short side. Okay, friends. So let's take a look on the other one. So friends, now GBPUSD, I think you're going to remember that I think this is the third week that I talked about that each week one player added and another player cut and so on. And this week was not different, and I think we are about to see another big movement as we are discussing this for these last 2 weeks, and I'm going to explain you why. So take a look. First thing that I want to stress. Remember, I think was 3 weeks ago or 4 weeks ago, I can't remember for sure, but I talked with you with a beautiful trade that some of the big specs did when they pushed the price. While the price went up, they added to the short side, controlling the prices, and then they did a big push to downside. And then when price find another demand zone, they took profit again. And I think it's exactly what these guys are doing right now, because check this. Can you see this? That was a huge cut on the long positions. What that means that the big specs, they took the opportunity and they are not believing anymore that the price is going up, because if they are believing this, what they would do is to edge longs, not cut. So what they did was to take profit while price was going up, and what we saw was they take money from here and add it to here. So I'm pretty sure that the next movement will be to the downside, and I think they are going to push price exactly to this region right here, and we are talking about 1.28. That's not far from here. It's about 200 pips, so that's a given. Can you see we have this zone right here that was respected, and if you are going to do the trade, you just have to keep your stops above this region, okay, and you are going to be okay. Good, friend. And that's it. Yes, that's not a lot to add, but this one is a pretty interesting, because it was not that much of open interest cut, but a lot of long positions were cut, and this is for me the main reason that I think this is going to drop. Okay, keep your stop loss on this zone right here. We are talking about 1.31669, and you're going to be okay. The target is around here. So right now, if you haven't subscribed yet to the channel or hit the like button, do it now. I'm going to wait a little bit. Okay, did? So let's go to the next one. Now we are going to discuss USDCAD. USDCAD is is a pair that is interesting, because 1 week we didn't care about it, and the last week was at a very interesting point, but right now big speculators are losing their interest in this pair again, and I'm going to show you why. Check this. Can you see what was our bet past week? We're talking about the Corona gap. See, it was that place right here. Let me show for you. We are talking about this. Exactly this place. And why this is interesting? Because this is not because the gap, friends. That's not because that is something that is that the gap has to be closed. Forget this. I'm going to say this word, but be smart, okay? This is just because it's a bet. It's an interesting point to enter and to short. It's just a speculative approach. And think, if retail traders know about this, imagine these big boys that invented this stuff. So we had a big bet about what will going to happen here. The price will rebound, or they are going to break it down. And that was the reason, and only because of this that we saw this happening. This increase on open interest. It was because that point. Okay, so what's going to happen? Going to break, or is going to rebound? And what's happened was that we saw big specs taking losses. They took losses on their longs, and they took small profits on their short. Almost something that I can say that was relevant, but if we look at the side of the positions, I think they losses and profits was pretty much the same. And right now they cut their open interest to this kind of charts that this is something boring, extremely boring. And if we look to the seasonality on COT data, we are going to see that the most similar year is 2003. Okay, and can you see for the next let's say 4 weeks, the price will range. Nothing is going to happen. And if we look to price seasonality, what we are seeing to the most similar year to the next next month, yes, we are going to see price ranging. Okay, and if we look to the historical average from this point, we are going to see the price ranging, the same stuff. So I'm not taking a position on USDCAD right now. If the big specs are not interested, I'm not sure, so I'm leaving this one, no positions this week, no bias, no nothing. And if you are thinking that I missed the NZDUSD, I did not. I'm not going to comment it because there is nothing to comment. Okay, friends, so let's move to the next one. Let's talk about USDCHF. You remember what I talked past week? Do you remember? If you don't remember, please watch the video or read the report, because it's going to be important. But what I was commenting past week was the significance of this price level. Can you see? This is not from yesterday or last week. This is from 2015. So this is something relevant. And see how the price reacted pretty fast from here every time it touched, and now it touched and also reacted, but looks like maybe we are seeing some resistance, maybe. Let's see what the COT data is telling us. Let's take a look. First thing that is important to note is that this is interesting, because even at this price level, this interesting price level, looks like the big specs are pushing, are adding shorts, and so this is a real danger. There is something that in this case the data can deceive us. I'm going to tell you why. Check here. Check the net position for the commercials. Can you see? Can you see that this account, this sum do not sum zero? So the reason for this is the non-reportable. They are not here, and looks like they, in this case, they representing a really big parcel of the net position. So let's think on the same size. So let's say that the big specs are short 19,000 contracts, and then we look here, right here, and we see that the selling power for these guys is 23,000 contracts. So they are about to run out of money. They are about to run out of money exactly at the point where the price retraces for the shorts. So I'm saying that this is going to happen, my friend. I'm saying nothing. I'm just showing you the data, okay? But the odds are on our favor. So I think this. Do you remember this thing I draw before this drop? Do you remember this square I draw before it happened? If you doubt, go to the previous videos or the reports. And what looks for me right now, looking at the data, is that we are about to see a big rebound on not just on USDCHF, but for all the USD and all the USD dollar index included. But this is a subject for another video. And so I'm pretty sure that what we're going to see now, even looking at this behavior, this commercial behavior, this is what I call the downtrend behavior. And this is beautiful to see. And right now we see that the big specs are running out of money to the short side. So yes, of course, I think that we are about to see a big rebound. And I have another things to tell you, not just the price, but check this. 2015 is the most similar year in terms of of non-commercials behavior, and check, we are lagging, and we can for sure say that this is related to Corona and stuff like this. But my point here is that usually at this time of the year we see prices for USD going up and for USDCHF. So let's take a look on what the historical average. We are already lagging the movement, okay, friends? So what's the historical average is telling us that we should drop a little bit more, but I don't see this happening. Just let's see what was the year, 2015. 2015, let's take a look. Yes, 2015. Check what happened on 2015 when the non-commercials had the most similar behavior to the actual year. We are already lagging the movement. So yes, I think we're about to see a big push up, and I know you see the reasons. So my trading plan is exactly this. I don't like to take positions on Monday. I prefer to take position on Tuesdays or after this, because we have Monday high and Monday low already set. And that's it, my friends. That's what I'm betting. So after today, so on Tuesday, I think I'm going to take a position, and my take profit is about this level, 0.96500, and keep your stop loss below this level. But if you see a wiki forming, don't think twice, it's a no-brainer, enter long again. Okay, so let's move to the next one. So friends, the last one, USDJPY. USDJPY, it's at an interesting level again, and why I'm telling you this, because if you are not very experienced reading COT data, this can deceive you, and I tell you why. Because check this, we saw increase in short positions, but the price went up. How can this happen? I'm going to show you what's happening. I use the COT index to normalize the price. What is normalize the price? So for example, looking at look back period, let's say of 3 years, compared to the 3 past years, how the positions of the big specs are right now. So what the COT index is telling me is these guys on the past 3 years, they usually take profits on these price levels. Sorry, not these price levels, on these net positions levels. And what when we come to the charts, friends, this is not from today or the last week. We are talking about 2016. So this is a big support that is being respected since 2006 and 2016. And if you remember, I placed this position on a video on the video from the past week, and it's exactly the same thing that you must do with USDCHF. Okay, but right now I'm using a conservative target of 107. But if we are indeed changing the trend right here, so if we are going to see all these 29,000 contracts closed, I think I'm being very conservative about this target, and I think we can easily see something like this. And instead of taking profit at this region, what we can do is add another position here. Okay, we can do like this. And that's it. Okay, friends, not too much to comment, but wait, I just remember one thing that I want to tell you about USDJPY. You almost lost that, my friend, almost, but check this. USDJPY have one interesting thing. It's just, in fact, it's just a word of advice for you, that the month of August is usually a really positive month for JPY, and this can push our trade to the downside. So take care with JPY. But another thing that I can show you that make my point looks good. If we look to the seasonality on top of non-commercials net position, we will see that the next move, it's a huge push. It's a huge push to the long side. That can mean that or they are going to add longs or they are just closing shorts. And as we just saw, this is the price, the net position level where they usually take profit. You can see here, and price retracing. And I think we are going to see this again right now. Okay, I think for this week is this, my friend. I want to thank you for watching. Thank you for the support. And this gives a lot of work to prepare. I'm not crying here, but subscribe, hit the like button, share this on Twitter, and if you want to know more about the tools, if you want to trade with me, if you want to trade with the community, if you want to have great guys with you trading, helping and developing the tools, I'm going to leave the link. Join us on the community. With this, you support me, you support my work, and you support the development of new tools, and you are going to be the first one to use. Okay, friends, thank you very much. I see you next week, and bye bye.